You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Hello, everybody. Welcome back. Today, we're going to be talking about what's moving prices and trends. We're always questioning what's moving markets and trends so we can take advantage of those movements. Currently, the markets have kind of been in a very erratic state, whipping up and whipping down based on news of the day, inflation, what's going on around the world. It's kind of an interesting time as to how erratic prices can be when there's this level of uncertainty. But what we're going to discuss today is what moves those prices on any given day or in any given time frame, and how we utilized that price action to take advantage of it, of course, to make money. While market environments do change and trends can become coma-like or aggressive and trending in one direction or another, the price patterns that occurred during those trends and what precedes those movements historically stay the same. So let's take a look at some of that and see how you can start utilizing it in today's market. Waiting for Daniel.
Yeah, I had to find the button. Good afternoon, everyone. Another great session. And Greg, I just had one bit of clarification, if you will, to your intro. I thought I heard you saying we're going to be talking about, trending markets, and what we're going to be sharing today is, I guess, refer to it as a turn. I want a potent turn, and these turns happened on all time frames, any trend, anything whatsoever. But as always, one concept doesn't make up a reason to enter a trade. So we'll come back to this in a moment. But every one of these involve turns. And so as technical-based traders, we're looking for one of those patterns as a starting point on the time frame that you're trading. And then we overlay these other concepts about where is this setup happening in connection with what trend? Am I trading a pullback in an uptrend? Am I trading a double top as a anticipatory trend reversal? What are multiple time frames telling me? Relative strength, weakness. What are the broader markets doing? And this is what Greg's course teaches you through all these thought building modules. And it may sound like a lot, but that's what you need to go through when you're learning any new trade. But once you have the experience, we internalize all these concepts, and I say in 1/8 of a second, as long as it takes my charts to populate, whether I'm on my laptop or my 6-screen setup, I can tell if it's a fantastic setup or not. So Greg, so explain today's section, turns and all trends. What are these setups and turns mean just on these simple red and green candlesticks?
It means that there was a shift or stall in momentum, and how that looks. We trade pictures. How that looks depends on what's happening at that time or that particular instrument. And at times, you can get different pictures just based on the time frame that you're looking at. And one of the points of this particular slide is, a main point is, call it what you want. It's going up. So, and this was something that confused the hell out of me when I first started, because when you start to learn about price patterns and you see something that works, it's normal to say, I want to see that every day because that's what works. And then the next hurdle is, well, when I don't see it and I see prices moved, why didn't I see my picture? And as you grow in your ability to recognize price movement, something that went down and back up can happen in different ways. So these pictures, this one here, it's got a much smaller degree of going down before it went back up. This one is more abrupt. This one is shallow, but it's, this toolbar pullback. So any of these are communicating it went down and now it's starting to go back up. And we have to then put this information in the context of where it occurred and what the trend is in multiple time frames. What's the market's doing, relative strength and weakness, which takes it all back to slide 1. But this basic information will put you head and shoulders top above those that are looking for the dark cloud cover or the Harami and shooting stars and all of that, because you understand, call it whatever you want. This simple pictures say it's going to go up.
And just to highlight, call it what you want, it's going up. Does that mean I buy this picture? Because, Greg, you're saying if I see that picture, it's going up. And the answer is no, because it's just the starting point. So same with a 180 reversal, same with a 1, 2, 3. Does that mean I'm buying every one of these? No, but it's our starting point for an analysis.
Yep.
Just a few more words, conversation about these terms, and then the rest of the slides we're going to be talking about putting everything we've talked about in the first couple of minutes in practice with examples, and then as always we'll pull up the market and apply it. So say stocks move all the times. These turns are going to tell us when the right time to enter is on that pattern we're trading on the prior slide, because we don't just buy something falling like Tyson, TSN. I've been watching for 3 days and it's just on a bobslide sinking. There's no turn at all yet on the daily chart. So the pictures, they happen in different ways. Greg and I power pack this 1 hour. We're going to give you as much information with as many variations of the turns and as we can. And then this is just kind of review of what we've been talking about. We're going to take this turn, take the pattern, and overlay these other concepts. All right. So these are 3 beautiful examples of turns, kind of a derivative of what Greg just covered about call it what you want. This is going up, but we're just showing you reversals can happen in many flavors, from 1 bar to many bars. And
it takes away what I was talking about as to look, when I first saw bottoming tail bars, I was like, wow, that is an amazing bar. When it forms, how things follow through. And then when I didn't see it, I started, well, I found it on a different time frame. And this is what this slide is about, is that as you change time frames, you either compress the data or expand the data, and it creates different pictures. And call it what you want, it's going up. This is another way of looking at this and understanding how changing time frames changes the picture, but understanding retracements, you understand that this picture and this picture and this picture all mean the same thing. It went down and it went up, just depending on the time frame you're looking at. And a more expanded one could look like this. A less expanded one would look like that.
So Greg, let me interrupt, because I guarantee an astute viewer is asking the following question: which one's better, and why?
Neither. It's dependent on what you're looking at. It's to understand that this one here that has the data expanded, you saw the turn, which happened at the bottom of this bar in a compressed time frame. So by thinking better leads to indecision, because now better means what? Better probability of it working, more money, where you could say, well, this one could mean more money if you get the turn right. Meaning you could enter above that bar's high, but is it at support? What is the trend? What is the probability of buying above this bar's high versus what might lead you to a little, maybe feeling a little confused possibly because you're buying higher, expecting higher, whereas you're buying above a high of a wider range bar, or your prices have already moved. And while prices have already moved on this one, you might be more comfortable because it's one bar versus 3 bars. But it's about time frame you're looking at. This happened. Something like this happened in another time frame. You just weren't looking at it because you were looking at this one.
Yeah, what is the point I was kind of leading into, and all of these examples are going to make it crystal clear. So let's just move on. But let's say this is a daily chart, and if my stop is under the low of every one of these reversals, because that's what we're talking about, right? Reversals. That the more bars you have, particularly with some type of retest pattern like this, is more demand underneath. So that's, again, wait till we get through these examples, but that's the point I was trying to make, that the more bar reversal, the more evidence that I have that is not going under that because it's been tested so many times. So
Right. In your time frame.
Right. I'm saying correct.
Right.
Correct. Doesn't matter. Those pictures in any time frame you want. But again, we're going to get to many examples. So this was one of our 9 pictures of bullish money patterns called the W bottom. Everything we do works on the bearish side also. So let's just talk about this one. So we have a momentum move down. So I want you to visualize, for today's conversation, we're talking about reversals, right? So this is a momentum move down, and this is a reversal. This is a 2-bar reversal for a little bounce, but it's not what we call a potent reversal based on this slide. It's not a big bottoming tail. It's not a 180. It's not a 3-bar reversal. But this pattern is, we're waiting for the potent reversal to be a retest of the prior low after this momentum move down. That's what makes this such a superior setup. And this is Greg's slide. It's timeless. It's in his seminar, and there's his seminar never goes out of date. But there's so many marvelous slides in there I liked, and I take a couple of them, and this is one of them. So this is 3 different flavors. NL means new low stock. So not only do we have, remember slide number 1, multiple concepts, we have momentum move down, we have a small retracement, we have a new low shock in a 180 reversal and major support with a price void. Now I know I threw a lot of words at you right there, but once you take Greg's course, you're like, yeah, I got it, go to the next one. I see it. And these are just different flavors of the same potent reversal of these W bottoms.
And let me add a little bit to the point you were kind of like leading me into making, but you reiterated your own thought on that, was that the bigger pattern would be more reliable. And I don't disagree with that, because when you have more information, especially what these examples here where there are retest patterns, they're higher probability. However, my point was, as you compress the data, you're not going to see this, right? It's going to take on some other form. And that's okay. You don't have to look at all the time frames. And that was what I was referring to as the hurdle that I had to overcome, was understanding that I didn't have to look at 8 different time frames, because that just led to a different kind of confusion. So if I can see this pattern in the time frame I'm using, I love it compared to just buying a 1-bar reversal.
Yep.
I don't have to look at all those time frames. And if this doesn't set up for me in my time frame, I just don't have to do anything, because I'm not getting the picture I wanted.
Right.
But simply said, a double bottom, W bottom like this is going to be more reliable in the time frame you're using than a 1 or 2 bar reversal.
Then I started over here, this little red bar, green bar versus this, right? Let's continue. We have plenty of examples. And so here's Marcelo said he's 8-year-old Johnny today. And this is one of our setups on the 9 that we started with, called a Master Trader Buy setup. And we want an uptrend, higher pivot highs, higher pivot lows. Little Johnny, I'm looking for retracements in an uptrend, pictures of buying on support. So in today's session, what does pictures of buying mean? What's the significance of that in today's topic? Answer: it's the turn. It's the turn that is triggering the buy setup. They had the turns are this one happened in a 3-bar turn, or maybe even a 2-bar turn. This one happened in a 3-bar turn. So Greg has this saying, it's the same but different. So the message of these two are the same. And we take this picture, that's the picture we are looking for when something retraces in an uptrend to minor support. This is not that picture. It is on the weekly, but we're just going to get through as many of these as we can. They're different pictures of turns, but keep in mind, a turn is not a tradable event. We're looking for patterns and price voids and so forth. So yeah, go ahead, Greg. I love your stars.
So
absolutely.
what Dan is showing, right, in the multiple time frames, I'm just pointing it out so it's obvious to you, is that this one giant bar started here and prices accelerated and made that bar. And this was the following pullback, right? So we're now taking the X-ray into that, where you're seeing these compressed bars into 1 or 2 bars on the weekly. And now where we can look at more detail on the daily, we can see this very nice gap reversal bar and this topping tail that didn't follow through, and then this green bar. And so as we expand data, we can see more details, and there's a balance between doing that, because, you know, having done this for a very long time and working with many traders, there's a tendency for you to go to the extreme, meaning you start looking at a 1-minute chart and you're presuming to be a swing trader because you're looking for the ultimate entry, and that is a rabbit hole. So you have to find that balance. If you're a swing trader, there's no reason to be looking at 1-minute charts or even 5-minute charts. And so you put in the context of what kind of trader you are and the time frames of choice that you're going to use.
Yeah, so to add now the pattern. So this whole box is a multiple bar turn in an uptrend at the 20-period moving average. This was one of our 9 patterns we showed you, called a bullish 1, 2, 3 continuation. Would have that been an acceptable entry? Yes, as a 1, 2, 3 in an uptrend, your stop is under here until it gets altitude. Okay, it had a little false start. We use this saying of, you know, a poker term, the tell. So okay, we sat through it, and it's getting its sea legs back a little more. This was an ugly red bar at the low of the day, now closed with a range expansion through the high of multiple bars. That is our bar, either to add to the position if you took it as a 1, 2, 3, or as a new position or a multiple bar turn. All these bars are in the upper 50% of this, which is a bullish concept. And we got a price void up to the prior high. Weekly chart is a buy setup. So that was one of our concepts, multiple time frames. So that's a fantastic setup right there over this last green bar.
Mhm.
Same but different. You know, this was a bottom. It was below the 20 and 50. So would I buy right here? No. Why? Go to the first slide. There's no compelling setup, but we might be selling out of the money bull put Reddit spreads because of everything in this rectangle called a bullish turn or a bullish short-term bottom with a closing breakout at the 2050. Okay, so at that, I would have done a put spread over here, but let's focus over here.
Dan, 1 second. Does anybody in the room not understand why that this was not a compelling pattern? Because you say, well, Dan, it went up like amazing. Why can't I trade that pattern? What was going on there that wasn't compelling, but it went up? I mean, I would be thinking that. And I'll point out a few things. First of all, it was going sideways. The moving averages were intertwined with the prices. It was beginning to bottom. So it wasn't compelling or evident until it already started moving. As Dan said, even here or here on this bar, a put credit spread would have been an excellent vehicle. Not every pattern that moves aggressively is going to be something based on what we look at to be compelling. So every method in retrospect maybe has limitations because you're trying to figure out what moved prices here. You have to accept that. Whereas this one,
Yeah, take it away.
as it comes down into this area of support and it attempts to go down and it doesn't, and then we get a wide range bullish expansion bar with no follow through to this red bar. Someone posted in the question, I was going to wait for a picture, a pattern to explain. They had, what's the difference between a red bar ignored, RBI, and a 1, 2, 3? Well, you don't know a red bar ignored is ignored until after the fact. A 1, 2, 3 is presented to you in the moment that you actually see it. I didn't know this red bar wouldn't go lower until here. And a 1, 2, 3 would be if we had a narrow range bar here that would give us a new entry point. That's an entry pattern. 1, 2, 3 is a continuation pattern. An RBI is an observation until you actually know it's been ignored. And then how was it ignored? This was a red bar ignored right here, but it wasn't a compelling pattern because it wasn't a range expansion bar. If this bar went down here and it was followed by that would have been a compelling pattern to buy it. Everybody see the difference?
Yeah. All right, awesome. So yeah, so everything in this box, today's subject, we can't control the candlesticks. All we can do is interpret them. So it was a 1, 2, 3, 8 bar turn at the 50, downside shakeout, and here's my price void. Target, I don't know, but 92, 94, I don't know. We're in management mode. Same but different. I got a right that broke out. I got a pullback. This range expansion gets our attention. Does it mean I trade it? No, not unless there's a pattern and we go through those other criteria. Now I have a 1, 2, 3. Is that tradable? Yeah, because the weight of the evidence would have suggested it would have gone through that. Uh-oh, now I have a red bar that went deep into that. What do I do now, Sam? Answer, nothing. What do I do now, Greg? I got a 180 reversal with a closing breakout right here. What do I do now?
I was just answering a question privately.
And it-
Well, with this bar, you just, it's a buy above the high.
Correct. Right. And it gapped up, and you love buying pullbacks to support. So yeah, you're in that tail in the morning.
Yeah, that's as an intraday trader. And I even mentioned that pre-market today where I think it was with the gap up. Yeah, it was on the Qs gapping up. And I pointed out to where I would look to pull it back, and buyers did show up there. And eventually, it's kind of a crazy day, but we'll see where it ends. But the idea of, this being resistance, it backed off from there, and then it gapped up intraday. There was a buy setup in here. But as a swing trader, this pattern happening in this area of support in an uptrend would have just been a buy above the high, would have stopped below the low.
Yeah. So again, we keep highlighting today's session and then put it in the context of the overall patterns to make money, of course, and for education. So see what I have here is this first bar is a 1 bar reversal. Now I have 1, 2, 3, I have 4 bars. And that's kind of when I was leading you earlier, Greg, that I have more information. I have a 4 bar turn instead of a 1 bar turn, and based on the arrangement. And this particular example, Greg, you know I love doing this to you every now and then. So on this, over this bar's high, look here, draw a line for him, 65. We sold this 65 put spread for over $1. So that this pattern, we're saying we're taking in $1.05 a share, immediately goes into your brokerage account. And based on this pattern, I don't think it's going down there by expiration, and we keep the money. That's a bull put credit spread using our technical approach.
So what I'm highlighting there is what Dan actually posted to the text alerts to subscribers as to what to do. You give companies a chart of it to show them the chart so they understand the picture, why they're doing it, and then gives them the management of, hey, take some of the money, right? Take money, close it out.
I have stars here. I'm not going to spend a whole lot of time. Just use kind of common sense. Look at the overlapping bars. Notice these moving averages, declining 20, declining 50. That's telling me it's in an ugly downtrend short term. But guess what? Look at all these overlapping bars. They're not going down anymore. Look at this red bar gapped up here. Now I have a gap over all of this consolidation. As a short-term trader, I would have traded that. Now, yeah, go ahead.
I'm pointing out those little hearts because Anthony posted a couple of times in the Q&A about a red bar ignored, or the 1, 2, 3. So those are red bars ignored. Now, did that mean take action in the moment? Not necessarily, but as you put together what we call bar by bar analysis, and I say, oh, well, this was a gap reversal bar. Now it goes down. It's in a downtrend, as you can see. Now, this one closes at the low, and it gaps up and closes at the high. And now you've got this 2 bar reversal here. Things are beginning to change. Now, the distance here, it really wasn't climactic, but at some point, probably over here, it was getting climactic. And that basing, you might be thinking, some of you that are new might be thinking, why is that moving average getting closer? Because this is going sideways and you're averaging in current data and dropping off the old data where prices were up here at one point, and then it fell sharply. So getting above a moving average doesn't mean buy. But we use the moving averages as visual aids we understand what they're doing. So they communicate to us what's happening with prices. Not that I can't see the prices, but as we're scanning through charts, it just becomes a picture that I understand. I put together the thought process of the picture previously. So when I see the picture, it creates a thought as to what's happening right now.
So down here, down a lot, this bar right here was a closing breakout. We would have bought over the high of this red bar the following day, but it didn't trigger. It made a new low. This closing red bar 100% suggested lower prices. I got 3 inside bars. I don't know what's going to happen. Now, once it gaps up and closes green like this, now I have a W bottom with a new low plus. It just trapping the bears here. So then it blasted up. And then this is a picture of a beautiful 2-bar reversal. And let me add, when we say a 180 reversal, they have to be wide range bars. So just because it's a little red and green, we don't call it a 180. Because we want a shock element to it. So this was a beautiful 180. What is the name of this pattern? A buy setup. It's above all the moving averages. I got my 1/3 retracement, all these moving averages. Not only do I now have a 2-bar reversal, I have a 3-bar reversal. Why? Because I have a bullish 1, 2, 3. Well, wait, now I have another inside bar. Well, guess what, McFly? Now you have a 4-bar reversal, buy setup, price void, after 100% retracement. And that's an incredible entry right there.
Let me explain a little, Dan. The question wasn't a question. It was more of a statement. Bill said, is your 1, 2, 3 the same as a John Ross of the Ross hook strategy, where the RH is a retest of support and resistance depending on the trend? All right. So look, when you say hook, it means pullback. It's another word for retracement. So this is a hook. I'll call it what you want. We call it a pullback, some kind of a buy setup where you had a momentum move and it pulls back, and like a fishing hook. Just remember a picture of a fishing hook.
Mm-hmm.
Also go back to our conversation of multiple time frames. So yes, is it the same as a 1, 2, 3? Well, no, because when you stick to the time frame that you're looking at and talk about patterns, this is a hook. This is a pullback. This is a little sideways bar in this time frame that came after a wide range bar. Now, if I expand the data, right, this could look like this, but it's such a shallow little retracement. Whereas when we look at retracement patterns, we look for a sizable retracement, ideally to an area of what we call minor support, where the hook begins to form. I hope that clears that up.
Yeah.
This
right here
may not appear as the cleanest hook, but it's a hook. This is the power bar, the power move. This is the retracement. This 2-bar reversal, and this is kind of a 1, 2, 3, 4, is your hook.
Absolutely.
Right. So understand, we talk a lot. Dan and I like to talk. Right? So, but the things that we're talking about, it's about momentum. So power, this is power. And retracements are just a technical concept that everybody understands, that it's pulled back. Now, how it retraces or turns is significant as to the reliability of the pattern. So just saying something's a hook or something's a 1, 2, 3 doesn't really empower you to utilize that terminology until you start putting together what Dan and I are explaining.
Yeah,
or
this is
take the course.
excellent example of slide one that we're showing turns happen in different means. That doesn't mean anything unless you just said it beautifully. You got to put it in the connection with the setup, overall pattern, the other concepts. Then it becomes a no-brainer trade. But you need the education in your course to understand everything we just said, that it's a no-brainer setup right there. Why is this a no-brainer setup? I'll tell you why. Nasty red bar. I remember this day. It was some economic news at a 10 o'clock a.m. Spiders tanked on a 15-minute chart. Guess what? We have a concept of no follow through to this red bar. It slowly chugged its way up. I now have a closing breakout, but would we buy here over the high of this bar as a day trade? Absolutely not. The greater than 100% retracement, but you have our attention because it's a closing breakout. And look to the left, we've defined price void means insignificant resistance. Now here's my no-brainer entry. I have another example of a buy setup on a 15-minute chart. So I don't, that's my entry. Buy setup, support, occurred this little 2-bar reversal, and not a 180. It's just our entry. It traded over prior bar's high in the area that it should have.
And it's kind of like a little mini hook, if you want to call it a hook, whatever name you like.
All right, so we're throwing a lot at you at always, and many times we like to say, okay, well, here, print the screen. We're going to give you some objective things to look at. So that this, I don't even know what this was. It was an IPO. And so I use the term in the green room a lot. It's a potential bottoming pattern, a potential buy set, a potential W bottom. So now, based on this green bar, I would be saying it's a potential bullish retest, bottoming pattern, sloppy W. So, so how do I come to that conclusion? Well, it's like Jacques Cousteau. Inspector Clouseau. Let's look at things. Okay, do I have a pattern here? Well, I have a retest. I have a small breakdown failure. I don't have a tradable event yet, but okay, that's my answer there. What's the trend? Still down. I'm watching it as a potential bottoming pattern. Distance between lows. Well, made a new low and snapped right back. What about support? Well, look to the left. I got support there. And the snapback is in the area of support and the new low plus. Size of the green bars. That's the biggest green bar since this one. So buyers stepped up. Do I have a price void? Not yet. It's in a trading range. Relative strength or weakness? Well, compared to what? To the market or sector. Red bars ignored. So would I do anything with this recent IPO? No, but I will watch it every day. Where's my entry, Greg? We've said that all the time. Give me a setup, a price void, and then I'll tell you what it is. So this may set up in 3 days. It might not set up at all. I don't know. So this example, ugly, 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 downtrend, snapped right back. Not until I have a closing breakout does that interest me. But now it's extended. We have some better examples. Same but different. We've talked about this picture before. We have a gap reversal on the 50, support, a 1, 2, 3, another fairly inside day. So now I have a 3-bar reversal instead of a 1 or a 2. That's a beautiful entry right there. And that's where we gave it.
You got a nice positive surprise gap.
Yep. All right, so this one I'm showing you, it tried to turn and failed. So Greg, if you don't mind, today's subject, we've just shown many examples of compelling turns to get on board. Is there any compelling turn in this rectangle?
Not
No.
that thing, but it was suggesting that it could go higher. Okay, so let me explain that and why it's not compelling, but I'm interested in it. Let's put it that way. This was a really powerful move, and the way it's pulling back, the momentum is beginning to slow, and this bar breaks down and it comes back up again. I don't like this crap. So when this brought in buyers, that little breakdown failure, and they're going to be more aggressive because of this power move up. Now, none of us knew that it would form a topping tail until after the fact, and we didn't know it would do this either. So what would have been great, what would we have looked for that would have made it compelling? Well,
I call it a something bar.
so this breakdown that occurred didn't follow through and it came back up again. Now I'd be like, let's do it.
Right.
Because it had this kind of shakeout. There was a, it was a failure of a failure. And
Right. The title.
back up again.
Yeah.
Yeah, but
we have
thinking by here.
But we also, based on what we're teaching today, is we're applying our objective analysis to say, I never had the data to hit the buy button. It never set up, even if it was on my interest list. So this is one that I grabbed over the weekend, and I'm like, wow, look at all these beautiful reversals. So we can probably go right to live charts after this, because this is a fantastic summary chart of everything we've talked about today. So let's discuss the bullish turns at the 50 MA and setups. So just remember, a turn is not a setup. So 20, 50, 200. This is a 2-bar reversal. So would you have traded that?
No.
I would not have as a swing trade, because I have lower pivot highs, lower pivot lows. It worked, so probably as a day trade, you would have had some nice trades in there. So that's just a 2-bar reversal, not a 180. Because remember that these bars are not big. Let's talk about this one, Greg. What's happening in this?
That is what you referred to. It's not a W, but it's more bars, right? You would talk about more bars being more reliable than a 1-bar. And in this time frame, that's what we have, and why you drew it as you did with this little moon, half a moon thing there. And you've got these tail bars that aren't following through. So you can see that demand is increasing here. However, not until you get this bar that closes near the high, kind of a range expansion bar, does it really become compelling. This was
right.
It's becoming, and it would have been, hey, start thinking the turn is happening since it's in this area of support. You can notice how the moving averages are getting closer together. So not every pattern develops in the moment so clear. It's just the way it is.
And so here's a 180, and illustrating that does not mean it's a tradable event, but it is a 180. Why is it not a tradable event? Because look to the left. There's more there's football players there. There's resistance. There's no tradable pattern. This one, it's more of a continuation pattern. It's not a turn as we're teaching you today. But this was a nice closing bar deep into resistance. This red bar, the bottoming tail, went to the prior bar's low and closed at the high. And then the next day gapped up. That was a tradable event. This gap breakout. Yeah, inverse head and shoulder, exactly.
So
Exactly.
here where it tried to break down, it turned out to be a red bar ignored. The green bar up is bigger than these bars. And then this is what we call bullish price action. And that bottoming tail bar, that was a red bar before a bottoming tail bar. This is a fantastic pattern. And, just putting it together with everything that we said, call it what you want. It says it's going up.
Yeah.
So just a bigger picture as we put together this bar by bar analysis, call it a head and shoulders bottom, call it whatever. I mean, that's coming after this bottoming that's going on. And, as it all comes together, it's a very compelling pattern that it's going to go up.
All right. So this one, we can't describe every example, but Greg's course teaches you how to interpret the information, whatever's thrown at you, just like a poker player. You know how to play poker, and whatever's dealt at you, you know how to deal with it. So this actually was a bullish gap up. This was on our gap list, but it could never get moving. And so then 2 inside bars is doing, there's nothing to do. Now I have a 180 reversal retest and a 1, 2, 3. We enter the following day, because now if you count all these 1, 2, 3, 4, 5, I have a 6-bar reversal at the 50 MA, red bars ignored, 180 reversal on major support, and a 1, 2, 3, and a price void.
Yeah. And support. And why it pulled all the way back like that, who knows, which is market environment, but it did.
And so 2 things here, and then let's look at real charts. Come see us in the green room. We have a no-brainer $7 trial for spend an entire week with us. And that's where you will watch us implement our trade, if you will, our profession in real time. And so instead of looking at these beautiful charts and explaining concepts, we're doing it in real time, scanning, answering questions. This is Greg's course I've been referencing a couple times, whether you want to trade stocks, options, cryptocurrencies, futures, commodities. This is the technical based approach to understand price action. Everything we talk about on every slide, this is the foundational course. This was a special we had a week or so ago, and Greg told me to leave it open for today. But so this is his same swing trading course. We're throwing in our top-down analysis course, which is top-down analysis, intermarket approach to trading. We're going to show you, Greg's going to show you his scans that we show and we give to subscribers, lifetime coaching. And this is a directional options course. So if you like trading patterns and buying calls and puts and bullish and bearish strategies, that's my course, same add-ons. And then this is a combo for both. All these are fantastic 40% discounts through it the end of the week.
All right, let's look at the charts. This was the symbol that I put the link in there that Sam shared for the pullback with the wide range bar and the pullback into support. And today, we'll see where this ends the day. The day's not over. That could turn into a topping tail bar. So we want to make sure that it closes like something like this or even a little bit higher.
Yeah, we're not seeing anything.
Oh, hold on. Okay, that's because we're on that thing, Dan, where I have to turn off yours and turn on mine and vice versa. You see it now?
Yep.
Okay.
Yeah, great example. RMD is this turn gonna hold or not?
So depending on how you expand or compress the data, I like to draw. Right, if we expand the data, got a whole bunch of bars going up, and now this is pulling back into support, and it's beginning to make the turn. But we have to make sure that this bar closes as it is now or a little better. And if we look at this, I should show you. Just maybe a 30-minute chart will do. Look. And now on this time frame, we see how it's, retesting the pattern. Look at the gap reversal. Look at the red bar ignored, another red bar, and now it's moving up, and it's going sideways here at resistance. So everything we talked about is applicable to any time frame, but we have to choose the time frame that we want to look at. And I just arbitrarily picked a 30-minute chart because I knew this was multiple days ago, and I had to go far enough back to be able to see that and show it to you. So this looks like, getting ready, but we got to see where it ends the day. Right? Can it trade up here? All right, let's go back to the daily charts, and anybody that wants to look at things can throw out a symbol. I got plenty of symbols
Right.
here.
Here, Greg, show them, because you mentioned this morning, IWD as being a possible short. And that's a good example of a turn and a downtrend.
Sure. So this is value index, the Russell 1000 value, small cap value. And Russell has been underperforming. Here it made a turn down here, and it had a nice rally up into this resistance area. Breakdown, retracement, down again, and you can see kind of this head and shoulders type of a top. And this morning, everything gapped up like, oh my God, it's not like they were at 2% inflation. It was like, what, 4.9% or whatever it is instead of 5%, like whippy.
Yeah, unchanged, I thought, yeah.
Yeah, and so now, we've got this nasty red bar. We still have to make sure it closes like this, and this is a good short setup, and we'll share size it up above here somewhere, but it shouldn't get back above this bar.
Right.
And if this market is going to get ugly, this might be headed all the way down here.
Agree. Yep. And right, so that's what we call a sell setup, master trader sell setup, the opposite of a buy setup and an uptrend. And this is a multiple bar turn, is what we say. So, whether you count the white bar, it's 3 or 4 bar turn. And so that's going to be more resistance to get through than a 1 bar turn.
The LTR, this gapped up on news the other day.
Earnings yesterday, yeah.
Earnings. So it's such an extreme move, and you can see it came right up into this resistance area. It's something that I put it in a thumbnail. I was like, all right, big move. It retested this. It moved too far, too fast. It needs to settle down, and I'll watch it every day and see how it develops. Now, the week isn't over yet, but when it is, see how I compressed that? It's bottoming out over almost a year. And so if it closes like this on volume, that supports a bias that it's going to go higher.
Mm-hmm.
Oh, looks good. So here, these are different software stocks. So we can look at, when I change that, it shows me stocks that are in that same sector. This is software infrastructure. Here's a 29-cent stock that at one time was a very expensive stock, but it's bottoming out. So if you're like, stocks that are 20-something cents that have the potential to double, this has some possibility to it.
I like it.
Let's throw it in there.
I am.
Yeah. Akamai, you mentioned this last night, Dan.
Yeah, I had earnings.
Right. So, gap up. It's just coming out of a downtrend. It's got resistance to the side. So it's not all that attractive, but worth starting to keep an eye on it. And so we're looking at stocks. Well, that one's bottomed out. We talked about this a week ago. It's got moving here. Broke down and came right back again. So that's moving. There's a little pullback pattern. That's kind of weird where the bars are so equal in size like that, and the opens and closes are right next to it. That's a really weird kind of a pattern where the little bodies are all about the same size in that way, where it, whipped up and whipped down and ended pretty much where it started the day. All right. I haven't been able to be here for a while. It's Kim saying, did either of you do anything with Budweiser with all the news? No, that's an ADR now. Right? I think it's a joint, right? That's why it's got all these gaps. We tend to stay away from these, Kim, because it gaps. It's not an American company anymore, which is a terrible thing. But the news about whatever, more wokeness going on.
Yeah.
Think about a tranny or something. I don't know. Things are getting too weird, man.
I know.
I know. All right. What else could we look at? So TAP has done well. Sam, I don't know what's going on with this company.
Right.
The beer is good. They got some great beers, but it just has not been able to do anything for the longest time. It's coming down to this long-term support here, but I don't know. Something going on with that. So different beer companies, banks. This was kind of a tell this morning. I mentioned in the green room where things were looking so well. I said, something's up here, everybody. I said,
Sure.
these financials are looking kind of ugly, even though this market is hanging up there so strong. And eventually, that and, started weighing on things, and transports started reversing back down again. And so, and energy started coming in again. So I think all these things are becoming more and more to the point where, whether it's the government, whether it's institutions, they're starting to warm up to the idea that, yeah, we're going to have this recession and it's going to weigh on the markets, and probably the markets, come in and correct a bit, and things will, we can see this topping pattern in the S&Ps here. We'll see if it follows through tomorrow. And so maybe the markets have to come back down here and test the, the bottom of this trading range, which will set up a great opportunity. Right now, probably tomorrow, Dan, lots of call spreads with some confirmation of today's bar. And
Yeah, look at the hotel stocks. Look horrible.
Yeah.
Marriott, Hyatt, Hilton.
yeah, that's pretty ugly. Yeah. So there's Hilton. Wow, that's really ugly. So you'll see what this all goes, but continue coming to MT Live, put together what Jan and I are talking about. Consider that special that comes around once in a while, and the charts will start to speak to you. All right. Next week. Bye-bye.
Trading, everyone.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.